All right, let's look at Crash 300 and let's see what is playing out this morning. Okay. All right, let's look at 4 hours, 4 hours time frame. Okay, on the 4 hours time frame, we can see that Crash 300 did obviously from here. Let's start from here. Pushed up 1, 2, 3 is a running flat. Okay, corrective structure, another up. So coming down, you use a corrective structure pattern. So from this, on this corrective structure pattern, we can see this down, corrective structure down, okay? So this down, I broke this low, okay? And if we do 2 by 2 from this high, okay, to this low, okay, if that is our 2 by 2, and we take this 2 by 2, connecting it to here, it has not reached to where we expect the Crash 300 to reach, or if we put it here, it has not reached. So obviously, maybe more down is expected. So let's say this is a neckline, and the breaking of this structure, this is a neckline, okay? A neckline zone. So breaking of this neckline, this zone, the market got into that area. If we use this last one, okay, and might probably start going down. Okay, that is for 4 hours. It may still do more, little down, or if we choose to go up, we can break everything, and we will see this counter trend line broken. Once we see this counter trend line broken, obviously we are then going up. Okay, but nevertheless, so let's look at the 15 minutes, what the 15 minutes is actually doing currently or right now. Okay, so this is the 15 minutes structure. We saw the market something like this. The market, this is impulse, so we can see that this is impulsive wave. Okay, this down is impulsive wave. Why this is what corrective structure. So I expect the market to get a spike here, got a spike, then we give an engulfing candle here. So I expect more spike, okay, will still come down, okay, but it might choose to spike down, or it might choose to continue going up to through another up before it will now wants to go down. Anyone who can follow it on anyone. So if you go another up, that obviously we are seeing, let's say from here, 1, 2, 3, 1, 2, 3. So we are seeing a kind of a corrective structure like this, then another one, okay, up like this. So let's focus on what we can see on this Crash 300. If it did not spike to spike go down, but that's what I'm expecting. That's why I draw this engulfing candle zone. If it didn't spike to that, obviously we might obviously be expecting seeing the market go up, okay, more before it comes down. Okay, so let's watch and see what it will do. But all I want us to understand is that these are corrective structures. So after this corrective structure, there will be another down. Okay, so if I want to be sure about the down, what I need to do is to draw a counter trend line connecting these lows. Okay, I draw a counter trend line connecting these lows, then I will be sure. Will be very, very sure. Anytime the market breaks the counter trend line, I will use it to do what? To sell. Okay. If I want, I can start here already. But if I want to wait, I can wait for this structure to be broken. Then I will start selling for our next possible. So let's look at Crash 500. Right, looking at Crash 500, we see that the market pushed up and down, and this is the wave we can see here. Is the wave. Okay, let me draw the counter trend line. Here's the structure. Okay, connecting this structure, you can see that the market did push down. Okay, did a push down, break this counter trend line. Obviously, there might be a corrective structure for another down. Okay, so that corrective structure, if possible, that it is 1, 2, 3, but I guess not. I guess not. Okay, so I think this need to push more up before it will come down. So after this corrective structure, more than is expected on crash 500. So to me, where would I be expecting the crash to start? Okay, where would I be expecting this crash to start? Now we be expecting this has been tested already. This up place, this up here or here or here. Any of them, I'll be expecting the market to spike. If we get to here, I'll be expecting a spike. Okay, we get to here, I'll be expecting a spike. Obviously here too, I'll be expecting a spike too. So these are these possible places I'll be expecting a spike, but I need to see the market push up with three-wave structure. This is one. Let's see after this, another up will go. Then I will be confirmed that the market will be going down. Okay, that is for crash 300. So crash 1000. Crash 1000 is pushing up already. Okay, it needs to push up. Crash 1000 needs to push up anyway. But the thing there is it's giving us a structure. It's a three-wave structure. So I'll just draw my counter trend line like this. If it breaks it down, I know that it will give us more down. So if it breaks it down, I'll follow it to go more down. But if not, it can do a corrective. It can do this down like this and leave us with a running flat pattern and continue up again. Okay. So that is what I'm seeing on crash 1000. And for obvious reason, we can check some engulfing candle at these levels to see where we can follow the market down. Okay. So now, let me put it on 30 minutes structure. Okay. Let me put it on 30 minutes time frame. So on 30 minutes time frame, I have a structure here. I have another one. I have the zone here, and I have another one here. Engulfing candle zone. So if the market entered the zone, I will expect the spike downward, or this one will expect the spike downward. Okay, these are the possible places I'm expecting downward. But if the market spikes and breaks this counter trend line, obviously it's going another down. So we will go with it down. Okay. All right. So let's talk about the boom 300. So obviously boom 300 is on a still high move. Okay. I was expecting this corrective structure to respect this area, to come to this area for pushing up, but nevertheless, it didn't. So what happens here? He did an up and create an engulfing candle here. Immediately he did that. He used it to push up, okay? Normal reversal pattern, okay? Use it to push up, and that was a nice up push, okay? So it's still on that up. It gives us a corrective structure, so and they break it. So the market is still set buying. So this buy need to complete before we think of selling. Okay, so the market is up push. So if you still want to enter, you can enter it here and put your stop loss below this zone or below this area, because the market might come use all this engulfing and spike up again. So you can enter it here, then put your stop loss below here to continue the ride. One more push, you option out, okay? All right, boom 500, boom 500. We're expecting the boom 500 possibly to give us another turn up, okay? Because we saw this first impulse against the trend and second wave just come all the way to this level. So I'm expecting the market to push a little bit up so that this corrective structure will be complete, okay? One more wave upward, then will go down. Unless it wants to do a running flat, then it can break it, come up a little, then continue. So, but I still believe that the market needs to push more up to give us first wave, second wave, to give us the third wave, then the market will start going down. Okay. Also on 1000, I'm expecting this market before I can continue the up, let it come down to this way, this zone, any of this zone, either this or this, any of this zone, to do a corrective structure and to retest and push more up. Okay. That's what I'm expecting. That's why I draw this. Okay. So more of them will optional because the market is coming to an area where it needs to push down. Okay. All right, we have we have volatility 10, okay? Volatility 10 has pushed up to an H10. I think on 15 minutes, I'm seeing volatility 10 somewhere here, okay? So this is the volatility 10. So he used 3 waves to come up here. So obviously, let's look at the bigger picture. This is a bigger picture. So obviously, here is a zone, okay? But if you break it, then you know that the market wants to go more up. But if you didn't break it and start reversing and break this counter trend line, then we go more down. Okay. Obviously, the market might reverse at this place so that we can see something like this downward, okay, or even better go below this level. And that is for volatility time. Then we have a volatility 25 already is doing corrective structure. This is an impulsive wave, and all these ones are corrective structure. So obviously we need to see the market start pushing back up. So any structure that will get around this area, maybe a little bit up, then another down, it will give us a structure that will draw it. If you break it, then we'll ride up. So we will be expecting a push, but we need a structure, and observation, our reversal structure or patterns to form, then take it up again. Another impulsive wave, okay? So volatility 50, we take it that this structure impulsive has started somewhere here, below here. After this, started this impulse corrective structure, impulse corrective structure, impulse. So at this level, we saw this market down, okay? So we expect that this market for this down, okay, we expect to see after this corrective structure, we expect to see another down, okay? That's what we're expecting to see from this volatility 50, okay? So it's either you enter here, put your stop loss above, or you wait for the structure to finish and to show you a means of coming down, then you can target it, or you go to 1 minute and look at the structure on 1 minute and draw your counter trend line on that structure. This is the structure on 1 minute, okay? This is a 1 minute structure. Okay, this is a 1 minute structure. So if you can draw your counter trend line from here, connecting it to here, yeah, that will help you to know. Once you break it down, then you to go down, okay? You know that you are targeting the next downward, okay? All right, that is for volatility 50. Okay, so volatility 100, finally, we see it very obvious that the market, I wanted it to come down here, but it has started pushing up already. So we saw that this market is pushed up first, corrective structure, so another up is expected. So moving up. If you use speed to break this level, that means the market will go more. Okay, this is what I mean. If you use speed to break this level, you see the structure, and the market has broken this structure and the counter trend line in it. So the corrective structure might come for more. Right? That is what we are also expecting on volatility 100. So I want us to watch this video very well, look at them very well, and see any of the trade that looks so sharp for you to trade and take advantage of it to make a good profit at the end of the day. Okay? Thank you very much and have a wonderful time.